Nvidia and Microsoft are leading the race in artificial intelligence. Microsoft, with its investment in OpenAI, hit the jackpot. Nvidia, with its decades of research and development of accelerated computing platforms, wins the award for greatest foresight. What makes each of these companies more attractive is the decades of innovation they've demonstrated. It's not been a one-off success. They have delivered products and services that have been the envy of industry peers for a long enough time that it's reasonable to assume this is a skill that they have and not a lucky strike. In this video, I'll compare these AI giants across revenue, profit margin, cash flow margin, return on invested capital, future growth prospects, and valuation to determine which one I think is the better AI stock to buy today.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Starting with revenue, we can see Microsoft has accelerated revenue nearly 3x in the last decade, growing to $245 billion in trailing 12-month revenue, up from around $80 billion in 2015. Nvidia, meanwhile, has also grown revenue and much quicker than Microsoft, growing to $96 billion in trailing 12-month revenue. That's up from less than $10 billion in trailing 12-month revenue in 2015. At this rate of growth, I wouldn't be surprised if Nvidia surpasses Microsoft in total revenue in the next 5 years. Looking at operating profit margin over the last decade, we'll notice two different things here. Number one, you'll notice Nvidia has the better operating profit margin, but also that Nvidia's operating profit margins are more volatile than Microsoft. At 61.87%, Nvidia has one of the best operating profit margins of any company in the world, and that's up significantly from around 15% in 2015. But between these years, Nvidia has several moments where its operating profit margin has declined significantly, once in 2019 and again in 2022. Meanwhile, Microsoft, with its operating profit margin of 44.64%, is among the leaders in profit margins for large cap tech stocks, but it's not among the leaders of the best operating profit margins worldwide, which is closer to 70%. Still, an operating profit margin of 44% is excellent, and that's much higher than the 30% it generated in 2015. So both Nvidia and Microsoft demonstrate two solid aspects of their operating profit margin. Number one, they're both lucratively high, and number two, they're both improving over time. Those are two things I look at when I'm evaluating operating profit margins, or the level of the operating profit margin and the trend of the operating profit margin. Nvidia and Microsoft demonstrate excellence in both of those characteristics. Nvidia, I would say, is better than Microsoft considerably in this metric. Now, I don't know if Nvidia can sustain this high level operating profit margin. One of its main suppliers, Taiwan Semiconductor Manufacturing, has already hinted that it's going to raise prices, and so that could bring down operating profit margin. I don't know by how much. Still, Nvidia's operating profit margin has spiked rather than trending slowly higher, so there's a little bit of concern that it may pull back a little bit here. On cash flow from operations to sales, it's a much closer story. Microsoft at 48.36% is only slightly behind Nvidia at 50.53%. Nvidia still demonstrates the volatility that we saw in operating profit margins, also in its cash flow from operations to sales metric. Microsoft, meanwhile, is more stable in its growth of cash flow from operations to sales, growing from 36% to 48%, a 33% improvement over the last decade. Nvidia's improvement has been much more dramatic, from about 15% to 50%, but it's also been more volatile, and I expect that to remain to be the case. Going forward, Nvidia operates in a more cyclical industry, whereas Microsoft operates in a more stable industry. Looking forward to the next 5 years' earnings per share prospects, the analysts on Wall Street that are following Nvidia stock, they expect it will grow its earnings per share by 52% over the next 5 years. That would be down slightly from the 66% it increased earnings per share over the previous 5 years. And given the industry tailwinds Nvidia is capturing, I think this earnings per share growth rate is reasonable. I don't think it's too high. I also don't think it's too low for the next 5 years. The amount of spending that's going into upgrading data centers from a CPU-based structure to a GPU-based structure will continue for at least the next several years, and Nvidia, with an over 80% market share in that industry, is poised to benefit from that trend. Meanwhile, Microsoft's earnings per share expectations are much more muted at just 15% expected each year for the next 5 years. That would also be slightly lower than the 19% Microsoft generated in the previous 5 years. Microsoft operates in more mature industries. There aren't the big tailwinds like Nvidia is experiencing, and Microsoft's investment in OpenAI is structured in a way where it does not necessarily boost its earnings per share. It invested in OpenAI, and it will benefit from the increase in the valuation of OpenAI as OpenAI continues successfully updating ChatGPT. Meanwhile, Microsoft's earnings per share will get a boost because OpenAI's computation, cloud computing, happens on Microsoft's Azure cloud computing platform, where it generates revenue from OpenAI. Return on invested capital measures how good a company is at taking investor money and creating products and services that generate profitability. I know you're thinking Nvidia and Microsoft have long since stopped asking for money from investors because they generate so much cash flow internally. But there you might overlook a fact that if a company generates cash flow or generates profits and decides to reinvest in the business instead of returning that capital to shareholders, they're essentially taking more investor money, because those profits that are generated by the company belong to shareholders. And if they're not returning it to shareholders and they're keeping it, reinvesting in the business, they're essentially taking money from shareholders, but in an organic fashion, from organic operations, from internally generated cash flows. And so in this metric, again, they've demonstrated excellence here, with Nvidia far superior lately at 103% return on invested capital. That's up significantly, especially in the last couple of years, as Nvidia's revenue and profits and cash flow have soared on the back of this convergence, this divergence, this reinvestment in data centers towards accelerated computing. Microsoft's return on invested capital is improving as well at 29.44%. It's solid, but it's nowhere near Nvidia's. Now, in this metric, I suspect Nvidia will come back down at least another 10, 20, maybe 30, 40% in this metric. It's unrealistic to assume Nvidia will achieve this kind of success in this metric for an extended period of time, because if it continues on this trend, competition will intensify, at least in terms of research and development spending, trying to create products that compete with Nvidia. Even if they're not successful at taking Nvidia head on, the sheer magnitude of new competitors that will enter and take pieces of the market will alleviate some of the pricing power Nvidia commands right now, and why it can generate such high profitability. Finally, the last metric I wanted to compare these two on is valuation, and they're very similarly priced when measuring by the forward price to earnings ratio. Nvidia at 29.67 and Microsoft at 28.71. They're very similarly priced. And given how superior Nvidia was across all of the metrics we looked at, I would pick Nvidia over Microsoft in a heartbeat in this comparison. Even though they're both excellent companies, Nvidia's success in recent years has really trumped Microsoft. Now, I like both of these companies. I have both of them rated as a buy, but if I had to pick one of these two AI stocks today, I would pick Nvidia. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.